Welcome to Marketopolis, at the crossroads of Wall Street and the internet. In a feed-driven era powered by Reddit, Robinhood, YouTube, X, and many other platforms, retail investors drive the conversation online. Corporate access has been blown wide open, conversations move at the speed of social platforms, and CEOs, IROs, and comms teams are rewriting the investor relations playbook in real time. I'm Matt Joanno, CEO of Stakeholder Labs. Each episode, I talk with public company CEOs and top operators to uncover fresh strategies for communicating and competing in today's markets. Whether you hold a single share or just love the story, you'll take away practical lessons for navigating modern public markets. This is Marketopolis. Let's get into it. Today, I sat down with Matt Schultz, the CEO of CleanSpark, ticker CLSK. Matt's story is one of the grittiest founder journeys I've ever heard. CleanSpark is a 15-year overnight success that started with reverse merging into a shell company on the OTC markets, taking trips to Moab to collect $5,000 checks, and his wife handing over her wedding ring at one point just to help make payroll. They even uplisted to the NASDAQ without a sponsor, without a bank, and without an underwriter. Today, CleanSpark is trading over $1 billion in liquidity in a single day. We get into how CleanSpark is evolving from a pure Bitcoin miner into what Matt calls a token factory, monetizing megawatts to produce both Bitcoin and AI compute tokens. He breaks down why they're taking a more disciplined approach to AI data centers than their peers and why Bitcoin mining and AI aren't competing businesses, they're complementary ones. We also talk about what it means to be a founder-led public company, why win-win is the only deal structure CleanSpark will accept, and how Matt prioritizes going direct, open DMs, X Spaces, podcasts, just to stay connected to retail investors. The future of air travel is fast approaching, and to help shape it, Surf Air Mobility is building a platform to bring together AI-enabled software, electrified aircraft, and a nationwide flight network targeting an estimated $100 billion regional air mobility market by 2035. Their SurfOS software, powered by Palantir, is designed to be the intelligent operating system for private aviation and air mobility. And with over $100 million in annual revenue and the owner of one of the largest commuter airlines in the U.S., Surf Air Mobility is uniquely positioned to advance next-generation technology across the industry. To learn more about Surf Air Mobility, visit surfair.com/Marketopolis. This program is intended for educational and entertainment purposes only and should not be considered investment, legal, or tax advice, nor solicitation or recommendation regarding any security. All opinions expressed on this show are solely those of the guests and do not reflect the views of Benzinga Inc. or its affiliates. Our show description contains additional disclaimers and disclosures. Let's dive right in. We have a question that we typically kick off the interviews with, and it gets into a little bit of the psyche of the average retail investor. But do you remember maybe the first public stock that you ever bought? I imagine it was a while ago. So curious if you remember what that was and what that experience might have been like.
It's interesting. This was back in the 90s, and their online message boards were really just starting to become a thing, Raging Bull and Silicon Investor. And there was one stock chat forum that I stumbled across, and it was called Bob's, BOBZ. And it was just a bulletin board. And there was a stock on there, primeholdings.com was the name of the company. And they kind of consolidated a bunch of .com assets, online shopping center, whatever. And it was an OTC stock, but that was my first one. Had a great experience and have been kind of addicted ever since.
Do you remember how you purchased that? Was that pre-E-Trade? Was that calling up a brokerage? What was that experience like?
Yeah, way pre-E-Trade. I set up an account with friend of a friend.
Sure.
At a little firm called Paulson Investments, and the broker was he was a guy that loved small cap stocks. His name was Bruce Cox, and I would have to call him, and you paid a significant premium for all of your trades. And that was back in the day that, stocks weren't priced in dollars and cents. It was dollars and eighths. So, I want to buy 5,000 at 3 1/8 or whatever the case may be. It was a different world, but it was a lot of fun.
Yeah. And I guess kind of digging in and fast forwarding to where we're at today, a lot's changed. Obviously, the rise of digital brokerages and then neo brokerages and the retail investor. How do you imagine people are discovering new stocks, new opportunities to invest. Maybe it's even outside of stocks, crypto. You're able to invest in privates and secondaries. How do you imagine people are finding those new opportunities? And then let's get into, how do people find CleanSpark? How are they introduced to the company?
I think that's an interesting question, and I'm 57 years old, and the world has become a lot smaller in the last 30 years. And with access to information and data being what it is, there's obviously an abundance of information out there, and the challenge just becomes sorting through, what's real and what's not real. And we see that in the media, and we see the same thing in publicly traded markets. So the source of truth that has the community behind it right now is X. I mean, and that doesn't, I don't think it's exclusive to investment advice or investment strategies and thoughts or company profiles, but also, media. I think you get that community forum to kind of establish a source of truth, and you have an open dialogue on the ability to kind of debate topics. So I think people increasingly rely on certain types of social media, podcasts, et cetera. But I think X has really been what shrunk the world for us.
Yeah, it's truly become that town square, and I think the velocity of conversation, but it is the place that people go to when there are big events in the world, when there are big events in the financial markets. If you want to get a quick pulse on what's going on, that's the place a lot of people are turning to. With your journey on X, was that something that you were active with before CleanSpark? Was that something that you started while building out CleanSpark? What's kind of your background in that platform?
I've used it since way back in the Twitter days, just because I was always fascinated by the the different schools of thought regarding, whatever the subject matter may be at the time. And as CleanSpark began to grow, there are a number of different message boards and forums, but there was a community on X that really dug in on Bitcoin mining, the way that relates to energy and infrastructure. I got a number of inbounds through DMs with different people wanting to talk. In fact, 5 or 6 years ago, there was a young kid. He was high school, getting ready to go to college. Guy named Ben Briggs, and he had a presence on Twitter, but he also had a YouTube page called Rex Finance, and he reached out to me as part of a high school exercise, just saying, "Hey, would you be willing to talk to me?" And so that type of engagement really, I think it helped us connect with retail investors, and we've done dozens of those type interviews since, and developed some amazing relationships. There are folks that spend a lot of time on there that do incredibly detailed diligence on publicly traded companies, and so to engage with those folks, to answer the questions, and they're not always easy questions, but I think that's really assisted CleanSpark in our growth, in communicating with retail investors, because going public is one challenge, but then creating any type of liquidity is an entirely different animal.
I think we've seen that trend be realized by the markets. We're seeing that trend be realized by the public companies and the issuers, and they're engaging more directly. You talked about going public. Maybe if we take a step back to CleanSpark going public, what was that experience like? Is that something that, in retrospect, you feel like was the right choice for the company at the time? I've talked to a lot of founder CEOs who say it was a lot more challenging than we expected. So for you, if you want to walk us through your journey in becoming a public company and what that was like, would love to hear that story, and then also just your feelings about it.
Yeah, I'm happy to do it. So my background is in energy and finance, and a decade and a half ago, we identified a really unique technology that had the ability to convert carbonaceous feedstock. So think municipal solid waste, or beetle kill pine trees, or coal fines, or whatever the case may be. There were a couple of retired Boeing engineers, and they developed a concept for a hybrid gasification technology. And they had, cobbled together a little bit of money to prove the value of their technology, but really couldn't get any traction because the trash to cash story was really proven to be largely ineffective. And we spent some time with these guys and came to realize that they had something that was real, and brought in an engineering and design firm and a couple of research universities to kind of vet and verify what they were talking about, and decided to take a flyer and invested some money and brought in a group of people to invest. And like anything, it costs a lot more than you think it's going to. And I was meeting with a potential investor here in Salt Lake City, um, on the south end of the valley, and I was telling the guy about how this could solve a number of problems, help deal with the landfill waste issue, but also, solve the challenge that we're still facing today about energy grids. And, I'll never forget, he opened up the window in his office and pointed across the valley, and he pointed at the state prison. And he said, "You see that building over there?" And I said, "Yeah." And he said, "That's an example of why I don't want to invest in this company." And I said, "Help me understand what you're saying." And he said, "The guys that are in that building, at least they know when they're going to get out. But if you invest in a private company, you never know when you're going to get out." And so it presented a unique opportunity that, would it make sense if we were a public company? And here we were, pre-revenue, not a very significant market valuation because it was all speculative at the time. So we went a different path than most people will do, and that is we acquired a publicly traded company that the operations had become dormant, a shell corporation. We reverse merged into that shell, and we built the company one shareholder at a time. And, for the first 3 or 4 years, everybody that invested in the company, at the time it was Stradian, which was kind of a nod to the stratified downdraft gasification tech that we had. But everybody that invested sat across the desk from me and looked me in the eye. And so it was a big challenge. And when we got bigger and we started to get some institutional interest, they can't invest in an OTC company. So, we decided to uplist to the NASDAQ, and every company that you see about it today, there's an underwriter, there's a transaction. We got the playbook. What does it take to list on the NASDAQ? And we filled out the application and checked the boxes. We didn't have a sponsor. We didn't have a bank. We didn't have an underwriter. And we did it the organic way. And so, the stock, it has its ebbs and flows, but, here we are today, 15 years later, and, people say, well, gosh, this is kind of an overnight success. And yeah, it is. It's a 15-year long overnight success. And people tend to forget that, every company starts somewhere. And as a founder-led company, I'm that guy. I was the one that, maybe my kids we couldn't get the team shoe for the travel basketball team because, there was too much month left at the end of the money. And, there were those nights that there was a night specifically, my wife rolled over and gave me her wedding ring. And she's like, I know you're stressing about payroll tomorrow, but I know you'll get it back. So there's some serious challenges in doing it. So, now, one of our FP&A team did an analysis, and in the last 6 months, we've had 7 or 8 days that we traded greater than $1 billion in liquidity in a single day. So you think about, driving to Moab, Utah to meet with an investor, take 2 or 3 guys, spend all day and have them write a $5,000 check on a Reg D offering in an OTC company. And now we're doing, $1.25 billion overnight at 0% on a convertible bond. So it's an entirely different game, but it takes a tremendous amount of work to get there.
Yeah, it sounds like the script was truly flipped in how you guys did it. It was a very gritty journey, and you guys are where you're at today, and you're a very known quantity within the retail investor world. But it wasn't overnight. When you look at that journey and where you guys are at today, what advice would you give other founders that are thinking about going public? Maybe not taking the exact path that you guys took, but what would you tell them when they're thinking about that path?
So kind of a funny anecdote, aside from the looking across the valley at the prison, my, when I was in high school, I was in a class called DECA, Distributive Education Clubs of America, business class. And we had to design a business. And, so I built a business plan for some random company, and I was the president. I was the secretary treasurer. I was the sole board member. I was every role. And my grandfather at the time was the most successful guy that I knew, and he ran a plumbing supply company. And I mean, it was a successful plumbing supply company, but it was a one-off. But I asked him to look at my business plan, and he said, Matty, I would rather have 1/4 of 1% of Chrysler than 99% of Joe's shoe store. And the reasoning behind that was he was telling me that they had an employee stock ownership plan at their plumbing supply company, and all the people that work there became owners. And when you're an owner of the place you work, you care more about it than if you're just swapping your time for money. And so to to have a publicly traded company was really important to me for a couple of reasons, and that was we wanted our teammates to all be owners, but then we also wanted the opportunity to work with other people that were passionate about what we're doing that maybe didn't have the opportunities themselves. So, if I'm starting it over again today, I'd still the cost and the burden of being a public company are unbelievable. I mean, it's millions of dollars a year just to be a publicly traded company. And but the value is there when you look at access to capital. And we're faced with a number of opportunities for land and power or M&A transactions, and the value that we have that most other people don't have is that, public company, the liquidity, the access to capital, the shareholder base, and just it's a differentiator. So, I would do it again that way. I would go public, maybe not OTC and sell a wedding ring, but I would still do it. And I think, being a founder-led company is a huge differentiator for us because we have those memories. We learned those lessons. We took the bumps and bruises, and so, our commitment isn't about a deal. It's not. I get a tremendous amount of feedback from shareholders, and I think the advice I would give is you have to have a thick skin because, people are more concerned with the expiration of their call options than they are about the substance of what you're building. And so it requires thick skin and a tremendous amount of patience, an incredible team, and I think an unwavering work ethic.
I think that's very strong advice. And with all of this, what we hear from a lot of CEOs is they almost have two jobs. So you have to actually run the company, and then you have to communicate to the market, participate in the capital markets. How do you balance that today?
That's actually a really good question. Back in 2019, 2020, I was in the CEO role, and we had a CFO, and we decided to kind of bifurcate the roles because it was becoming a huge load. And so we created an executive chair role, rather than just a passive chairman. And so I assumed the role of the executive chair, and my kind of half of the equation was capital markets. So dealing with investors, raising capital, handling analysts, um, dealing with the sell side, dealing with the buy side, um, all of that requirement. And then the CEO role was handling operations. And that was really kind of a productive relationship. And as the company grew and evolved, those roles kind of ebbed and flowed over the years. And back in August of 25, the board came to me and said, "Hey, we're going through a change." Obviously, my colleague, our former CEO, became a father for the first time, and was looking at kind of a reprioritization of his life. And so they asked me to step back in, and we've made some wholesale changes in the governance and the operation of our company since then. And we've broken down all the internal operating silos, and we've created this incredible team of people, and realigned some of the roles. Gary Vecchiarelli, who is our chief financial officer, we elevated him to the role of president as well. He's in Vegas. He deals with the legal team and the finance team, all the FP&A guys, the auditors, and he has a hand on the rudder when it comes to operations, but he also is very strong in capital markets. So we've created a unique partnership in that, it's very dynamic, and we've really entrusted the people around us. I mean, I'll be honest with you. I've surrounded myself with people far more intelligent than I am in their respective fields. And we trust those people. We don't micromanage. And a day in the life looks like 6:15 this morning. We're on a HPC AI stand-up call with our teams regarding, the progress on lease negotiations with hyperscalers, all the way down to negotiations on land and power, as well as access to infrastructure for behind the meter generation. And, that's how our days start. And, last night, probably 10:30, 11 o'clock, Harry and I were going through the conference schedule for what the upcoming month looks like. So it's not, my wife teases me. It's a part-time job, only 18 hours a day, but it actually is a lot of fun. And I think the cool thing is by creating a group of people that are owners, we share that passion. People are really honestly fired up to do what we do every day. And I think one of the things that's very telling, we had our holiday parties, one in Atlanta, one in Vegas. And you hear about people that dread Sunday night because Monday starts. And the feedback that I got across every part of our business, data center guys, Bitcoin mining techs, even HR guys, was that folks are excited for Monday because what we do is a lot of fun, and we have a really collaborative, really constructive environment. So it's a great opportunity. And I think if you can create that culture, that really transcends a lot of challenges, or kind of, I guess, maybe creates value that other folks strive to achieve.
I think there's a shared spirit in building the company out together, and we hear that a lot. Maybe tell us a little bit more about that. What is the ethos, the mission? What is that driving force behind the group that's backing this company, the employees, the exec team? Like, what is the mission that you guys are on?
I went through a class. It was a leadership class probably 20 years ago. And one of the principles that they drove home was, so much in today's business environment, people are looking about a win. They want to get one over on the other party, or whatever that looks like. And what I think you'll see with CleanSpark, and the reason that we have the tremendous portfolio of land and power, and access to capital, and access to infrastructure, and the ability to jump the line on different technologies, is because we operate under the overarching philosophy that it has to be a win-win. And if it's not a win-win, we don't do it. And that's a win-win between the company and the employees. It's a win-win between the company and the communities in which we operate. It's really important. And I think there are times that you just have to embrace the fact that it's not 100% the best for either individual party. But when you reach a point of agreement that both parties can succeed, that's a differentiator. And so, when we started into this, we were an energy company. We were building gasifiers, and then microgrids, and then partnering with the grid, and then data centers, and then Bitcoin mining. And all the way along, we created relationships and partnerships, and I still have those today. Never burn a bridge. And I think our team has really embraced that spirit. I mean, the teams that are in these small communities in Mississippi or Tennessee or Georgia or Wyoming or Texas, they genuinely care about the economic development director, or the utility manager, even the manager of the local site. And so when you have that kind of culture fit, and that legitimate concern for the people that we work with, it just opens up doors. And I don't mean that to sound shallow, that we leverage that, but it becomes this mutually beneficial interaction, and folks want to do business with you when you operate that way.
Yeah, I think the reputation for win-win outcomes with all sorts of partners, and I do think that geographic call out is a big one, especially when it comes to retail investors. We do see geographic concentrations, especially around a headquarters, because those companies they're out there, they're engaged with the community, they're supporting them. Shifting towards the business model, Matt, maybe give us what's the updated elevator pitch? If you're, I don't know, around the Thanksgiving table, talking to a cousin, what are you telling them about the business? Where are you guys at today?
The 30-second elevator pitch is that, we monetize megawatts of power to produce the most valuable tokens in the world. And those tokens include Bitcoin and also AI compute tokens. And, we do so responsibly. And through Bitcoin mining, we help communities to stabilize the grid, to balance loads, to decrease costs for the community, to create a tremendous amount of jobs. And in the AI space, we're in the process of deploying a solution that expedites speed to market, and has a focus on energy responsibility.
Where do you see the gaps from, let's say, retail investors today? Like, what might they be misunderstanding or misconceptions about that overall business model, that pitch, when it comes to CleanSpark?
I appreciate the opportunity to talk about that. Back in 22, we were a Bitcoin miner, and many of our peers were levering up to buy Bitcoin at spot. There were huge orders for ASICs. Bitmain launched a new computer, and, some of the bigger miners put billion-dollar orders in. And, we're energy guys. And so we did a pretty deep dive on, like, the Henry Hub, the future pricing model for natural gas. Most of the sites that we were operating were primarily served by nuclear power, but natural gas drives utility prices in the US. We kind of took a look at the market and thought energy prices are going up. And with a couple of $1 billion of new high performance ASICs coming into the market, and also contemplating the historical, 4-year cyclical nature of Bitcoin mining, we probably need to not follow the crowd. So, the market was $69,000 for Bitcoin back in November 22. We sold all of our Bitcoin kind of at the peak of the market, and, good and bad, but my Twitter feed was, I pretty much got excoriated. I wasn't a Bitcoin maxi. I didn't understand the market. Shareholders would never trust me. And so, I got a lot of abuse, and we took the proceeds of that Bitcoin and we bought immersion cooling infrastructure, and we bought data centers, and we bought switchgear and transformers. And lo and behold, by March, April, May of the next year, Bitcoin had gone from 69,000 high down to 15, 16,000 low. And these miners that many of our peers had levered up to put deposits on, they're now landing stateside and nobody can pay for them. So the same computers that were being ordered at $100 a terahash, we're buying them at, low double digits, $16, $17 a terahash. And now we're energy first. And back then, everybody was talking about asset light, buy computers, plug them in wherever you can find a plug. And we felt like that's the wrong approach, because this is much more long-term value to generate relationships with the utilities as a load balancing enterprise. And so, we went from being the last kid, the last of the majors, to joining the Bitcoin mining universe, to being the biggest American Bitcoin miner. I mean, nobody mines more Bitcoin in the United States than CleanSpark. And so, the challenge I think that people maybe don't understand or don't recognize, as we contemplated and have now begun to execute on this transformation to a token factory, including AI, is that many of the contracts you're seeing put up today, it's a contract with a neo cloud company, but it's backstopped by a hyperscaler. And shareholders care about, what's the impact on my call options over the next 60 days. And you don't take a deep dive and look at what the contract actually says. And so many of these contracts, they're backstopped by a hyperscaler, but the backstop stops after a certain period of time. But more importantly, if there's a fail to deliver by the neocloud and a hyperscaler has to step in, that increases their equity participation at the site level. It doesn't benefit shareholders. It dilutes the shareholders on
Yeah.
ownership of those assets. So what we're doing is we're being very pragmatic about building long-term constructive contracts that are going to make a meaningful difference. And it's really no different than the abuse we were taking when we sold Bitcoin. Our strategy then turned out to be an appropriate strategy. I'm not going to say anybody's was right or wrong, but as activist investors started to sniff around Bitcoin mining, the conversations we had with some of the activist firms wasn't about what we're doing wrong. It was how does CleanSpark think about this, and where do you see the operations from your peers have fallen short? And so I think being disciplined and having a thick skin and being pragmatic about the way you do it, we're building a solution, an end-to-end solution for data centers that doesn't exist in the space right now. You know, as it stands today, and maybe something that's confusing for shareholders is every Bitcoin miner that's now built a data center or is building a data center for a hyperscaler, they're all bespoke. They're one-off. And, we spent a couple of days, I took our executive team and we spent some time at NVIDIA. We went to AMD, we went to Meta, we went to Supermicro, and we learned that, the basis of design for some of these chip clusters is very precise. And so the reference architecture isn't flexible. So you're talking about hundreds or thousands of plumbers and electricians building a bespoke data center in the dust in the desert somewhere. Our conversations with the hyperscalers have indicated they're looking for something that's duplicatable. So we're taking that out of the field and putting it in a factory. So we can tilt up a shell and core. We've got tremendous utility relationships. We can build the substations. We'll build the data center, the shell and core component. And then in the factory, we're building the MEP, so the mechanical, electrical, and plumbing. And it's designed according to the reference architecture for whatever the chip is, the specified chip for that deployment is, and according to the basis of design for the off taker. So it's a differentiated approach. It's not a race. It's something that's, I think, resilient, and it will prove to be the standard for the space, because you look at the negative feedback on delays on delivery of some of these contracts and the extreme penalties for failure to deliver the RFS date as agreed by the contract. I mean, some of these, you lose a year of revenue if you're a day late in delivery. So we think about our shareholders and all of our stakeholders and our employees, and how do we protect everybody by making sure we do it the right way. So I think, you get on social media, and if the stock's up $1, our team are heroes and rock stars. And if it's down, there are people saying, these guys need to have you know, they say negative things. We'll just leave it at that. Um, but I think that maybe what is a misconception is that our interests are somehow misaligned with our shareholders, and nothing could be further from the truth.
You guys are a part of some macro trends, obviously Bitcoin mining and the crypto wave, now in the AI space. How would you talk about long-term metrics and what is success, and maybe even getting into like the decision-making criteria, like how you guys continue to shift and evolve as a business, and what should shareholders be thinking about as you guys take a long-term view on some of these macro trends?
It's interesting, because if I tell you the story that we started out as a gasifier company and then became a microgrid company and then became a Bitcoin miner and then became an AI factory, it sounds like we have ADD. But if you stand where I am today and you turn around and look back, it's a straight line. The basis is energy. And what we've realized is monetizing megawatts profitably and sustainably, creating win-win relationships with the utility, is a differentiator. You turn on the TV today, and Bloomberg is talking about the crypto event that's being held in Mar-a-Lago. And, the fact that Goldman Sachs CEO went from a crypto antagonist to a personal Bitcoin holder. And, we've seen the evolution with JP Morgan. Well, all of this is driven by energy. And the next story on Bloomberg is about Elon Musk saying we need 100 gigawatts of solar in the next decade. Well, Duke University did a study. The Nicholas School of Engineering at Duke did a study in 25, and they said there's enough headroom on the grid today to add 100 gigawatts of data center capacity, as long as there's flexibility and interruptibility in that headroom. So in periods of high demand, you can interrupt and curtail that. So I think, from our perspective, the measurement of success is the megawatts under management, the substations that we built and own, the utility relationships that we have, because it's evolving. But that's the one constant, and that's the basis of everything we do. It's all about energy. So I think if you measure us and you look at our growth, it goes from construction and testing with research universities of a single 1 megawatt gasification unit to integrating microgrids with utilities, to creating demand response protocols for California's ADR, to working with data centers to decrease the energy exposure to make Bitcoin mining more efficient, to where we are today. It really is a straight line. And so I think if you think about CleanSpark as a land and power company that produces, the most valuable tokens, I guess that would be my answer. I mean, I'm sorry that I went a little bit down a stream on that.
I think it's helpful to see that through line, and I think that common denominator makes a lot of sense. I think as you talk about different types of tokens, how do you think about balancing that? Obviously, the Bitcoin mining side versus AI compute is a little bit different. What's kind of in your mind moving forward? How you balance that? Are they different types of businesses, or does that kind of common denominator through line apply in similar dynamics to both?
I think monetizing megawatts, to my last point, is what we focus on. But the differentiation in the business models is that, you know, Bitcoin mining is pretty quick as far as speed to market. I can spin up a data center mining Bitcoin less than 6 months. I can do it for less than $1 million a megawatt. Um, HPC and AI, I mean, with our solution right now, we're between 8 and 12 million a megawatt, and it takes a year and a half. Much more durable, much more long-term contracts, but it's also a different energy relationship. Um, to the point of the Duke University study, there's 100 gigawatts of capacity, of headroom on the grid. And what makes that available is flexibility. So I think our businesses are complementary. We can certainly serve the inference offtake client with a hyperscaler, and we can blend with that Bitcoin mining. And when there's less demand for AI tokens, we're monetizing those megawatts mining Bitcoin. And the inverse of that also applies, and that is when there is a black swan event, like the ice storms that we saw in Georgia earlier this year. We can curtail those loads to push power back to stabilize the grid. So I don't think these businesses are exclusive. I think they're really inclusive of one another. And we were invited to the launch of Jack Dorsey's new Bitcoin mining machine, the Proto Rig, and that was in North Georgia. We attended the event, had some great conversations about the future of Bitcoin mining and the idea of bringing Bitcoin mining all onshore, building the ASICs here, working with local domestic utilities and mining the Bitcoin to create certainty. Because CleanSpark's belief is that domestic Bitcoin mining is kind of a national security imperative. Those were very productive conversations, but the CEO of the local utility grabbed me and he said, "Hey, Matt, do you mind going to lunch? Can we chat?" And so we went and sat down. This was in Dalton, Georgia. And they shared with us their big concern is that, Plant Vogtle had come online. All these communities throughout Georgia had bonded their participation in the nuclear reactors over the last 3 decades. And they had surplus capacity, so they forward sold energy into Florida to meet their demand. And now, fast forward, the data center demand has really driven it's strained the Georgia grid. And he shared with us, I mean, we were at they demonstrated the proto miner at Core Scientific's facility in Dalton. And they shared with us, Bitcoin miners have been a great partner to the grid because you can curtail when we have these times of peak demand, and you can stabilize the grid and keep the economics in favor of the ratepayers in the jurisdiction. Now having to provide 5 nines uptime, it creates inflexibility. And so now we're forced to source other power. So now Georgia, that forward sold power to Florida, is looking to buy power from other jurisdictions. So they've created this pinch point, and it's driven up utility costs. So having an interruptible load and being that partner to the grid actually helps the community. So having the ability to kind of balance that, I think, is a massive differentiator. And that's why, you hear a lot of Bitcoin miners that have now made this pivot. The one thing they have all in common is they weren't particularly great Bitcoin miners. Their cost to mine was high, their uptime was low, their fleet efficiency was bad. And so they were faced with a big CapEx upgrade in order to stay up with the more challenging economics of Bitcoin mining. So, we look at Bitcoin mining as a tool. We prevailed on a contract for 100 megawatts in Cheyenne, Wyoming. There was a hyperscaler bidding for it, but they needed a couple of years to build a data center, and the utility had power available today. You know, they didn't care that it was a $1 trillion balance sheet or $1 trillion market cap, excuse me, compared to a $2 or $3 billion market cap. What they care is there somebody that's going to buy the power and monetize that today for benefit to the community? And so using Bitcoin mining to go into a community that can spin up a data center very quickly, we can buy that power today, and that gives us the flexibility to build a proper data center behind it. Because you'll note, we have 250 megawatts in Sandersville, Georgia. One of the things we haven't talked about a lot publicly is we just bought a 122-acre parcel adjacent to that, so we can build according to the basis of design for some of the hyperscalers that we're in discussions with, and we'll build those facilities. But up until the day we switch it over, we'll be mining 11 exahash of Bitcoin, extremely profitable in that location. Then we'll pick it up, redeploy it, and do it again. So I think it's a very complementary business model. I think the market fails to realize just how valuable it is.
Yeah, you create the balancing between the two. You create some optionality on how you're working with some of these partners. I think, Matt, as we're kind of wrapping up a little bit, you have the advantage that you go direct, your X account, you're on podcasts, you really have a sense of your shareholder base and your community. What's the information that you're consuming? Are you listening to other podcasts? Are you on Substack? Obviously you're on X. Like what's your information diet? How are you pulling all this information in?
I read a lot. I'm on the Acquired podcast all the time. I think the lessons of the past are a tremendous tool for the future. And, to think that what we're thinking of hasn't been contemplated before is silliness. And there's just different ways that some of these fundamental principles are applied. Um, I really enjoy listening to the Pomp podcast. I mean, I think Anthony's a really smart guy. He's politically passionate. He's an ardent supporter of Bitcoin, but his understanding of capital markets is unique, and he has a different opinion than what you're going to get on CNBC. So, in the background, I have Bloomberg TV on one screen and CNBC on another, and I read a lot. I love the engagement we have on X. I do a lot of spaces. I get a lot of feedback. My DMs are open, and sometimes it's not a good thing. Um, but I enjoy the engagement, and I think we listen. This is a short journey that we're all on, and nobody gets out alive. And I think if we look at ways that we can optimize the efficiency of what we do and everybody can win, we're all better off. And people have different opinions about politics and strategy and energy and speed and all these things. At the end of the day, what Bitcoin mining does is allows cross-border settlement and access to financial markets for people that don't have it. It's hard capped and non-sovereign, so it protects us against these rapidly diluting fiat currencies. AI, it changes the world, right? I mean, I'm certain most of the people that will listen to this have queried Chat GPT about, why does my back ache in the morning when I, took these new vitamins, or what about, what exercise should I be doing at this age? Or, based on all of this, what's the value? I mean, I had a shareholder send me a query that he put into Grok, and he said, if CleanSpark deploys 5 gigawatts of data center capacity, and Bitcoin is at $150,000 a coin. What's CleanSpark's stock price in 5 years? And, just the opportunity to think about the access to data that we have today, and the fact that, we can power this network that provides that kind of answer and thoughtfulness. I mean, we're changing the world. You think about autonomous driving and robotic assisted surgeries, and I think we're providing value to the planet. And I'm excited to be part of the journey.
Wrapping up here, uh, advice that you've been given that you carry out in your role as leadership, maybe even referencing, I don't know, a favorite episode of the Acquired podcast, but something you come back to constantly.
I my favorite quote, and we use it all the time. Between the wanting and the having is the doing. And we have we've assembled a team of people that aren't afraid to roll up their sleeves. I think we we have an open dialogue amongst our team, and I'll give you an example. When we're preparing our earnings script, we talk about what's going on in our company, but we have to then compare and contrast to what's going on in the market and the world. And when you have an executive team of people that come from diverse political backgrounds, from diverse economic backgrounds and different social backgrounds, we don't always agree. But I think a terrific source of information for me, um, is allowing everyone the platform to talk about why they see what they're doing or what we're doing differently, and how we might think about it. And so when you have somebody that's a stakeholder, and not only that, but the income that they generate provides for their family, their interests are aligned with mine. And if they have a different perspective, we encourage that spirited dialogue, and we'll have some really intense conversations. And we don't it's not ever the ultimate parenting thing, because I said so. We reach a point that it becomes a win-win even internally. And so I think, that's a terrific source of, maybe a source of truth for me, is allowing and engaging and encouraging the people whose livelihood is based on what we're doing to have a voice in the way we execute.
A few rapid fire questions for the end. Uh, Favorite investing app, if you use one?
Being a public company executive, I can invest a lot, so I use Robinhood. I mean,
Yeah.
that's probably my go-to.
And probably like most execs, you coach your team, don't check the stock price every day. It's a long-term journey. Bitcoin in 2030, any thoughts?
Yeah, definitely up. Um,
Okay.
I think a hard cap non-sovereign cross-border settlement tool, um, only goes up from here.
Favorite sector outside of AI and crypto, Bitcoin?
Biotech, I would say. I've kind of gone down a rabbit hole. Adam Sullivan at Core has become a pretty good friend of mine, and he's got me down this journey on peptide supplementation. And so, my if you went through my Chat GPT history, there's a lot of dialogue about peptides, and the biotech space is fascinating to me because we all want to live longer and healthier. And there's Alzheimer's in my family, there's cancer in my family, and so I think that having an opportunity to invest in and support what's going to resolve that and make it better for humanity is appealing to me.
Grok, ChatGPT, Claude, favorite AI tool that you're using today?
All the above.
Okay.
I
In
I
combination. Yeah.
I use them for different things. ChatGPT is incredible for me as a more of an assistant. Kind of that thoughtfulness. Maybe you should consider this. Grok, more detailed, technical, and I'm just starting to learn Claude.
Message for retail shareholders as we leave. I know you've already shared so much about how they should think about the company, how they should think about what you guys are building in your future, but any last thoughts to leave with the retail investors?
I've had the opportunity to be in this new role since August 11th, and to change the strategy of the company and the direction of the company, and to build a team of people and to enter into a new space. isn't something that happens overnight, but our interests are absolutely aligned. And also, whether you think that the DMs, um, thoughtful and productive or just hateful and mean, go unread, that's not true. We see them all. I care about what people think. I try to be thick-skinned, but I also realize that when somebody's kind of bashing me on social media, it's because there are circumstances that they're facing too. You know, my investment isn't where I want it to be today, and it's got to be somebody's fault. And I'm happy to stand up and take the blame. But I also want people to consider the strategy that we've had in the past, the pragmatic approach, and the fact that everything that we've done, be that microgrids or Bitcoin mining and now AI, we weren't always the first, but I can tell you that we were always the best. And that's going to be consistent. And that's due to the people that we've assembled to be part of the team. And it's also largely due to the shareholders and bondholders that have entrusted us.
Perfect way to end, Matt. Really appreciate the time. Thank you for sharing so much about your journey, about CleanSpark, about your experience and wisdom. Really appreciate the time, and I know our audience will as well.
Absolutely. I'd love to do it again. So let's reconvene in a year, Matt.
Thanks for tuning in to Marketopolis, powered by Stakeholder Labs. If you enjoyed this episode, make sure you're subscribed so you don't miss upcoming conversations with the leaders shaping modern investor relations.